All right, just waiting to make sure that we're good. And we're live. All right. Hello, everyone, and welcome back to TheAlgoOracle. So in today's video, our plan is to discuss what just happened in the Fed meeting. We're going to discuss the press conference and some of the questions that we noted down for you. Just going to go through exactly what's happening and what is, what the rate increase mean and how is the market going to react. So for the ones that don't know, what happened today is that the Federal Reserve announced a 0.25% interest rate hike. And this is the first increase in 2018. And they also forecast 6 additional increases this year, so it's going to be a total of 7. And these, the aim of the increases in rate hikes is basically to make borrowing more expensive, so that consumers and businesses hold off on making any investments, thereby cooling off the demand and bringing prices back in check. So we basically just want to bring prices back in check. We want to have some price stability, right? So that's the main point of this meeting. That was the main point. So the main points I'm going to cover, and then we're going to go through everything, are the following. So the outcome of the meeting was that the economy is flourishing and should flourish in tighter policies. We are going to slow down demand to give supply time to recover, which is great. There is a very strong economy and good momentum in the labor market that we're going to touch on. It's time to begin to shrink the balance sheets. That was another of the main points, and some people can see this as another possible rate hike. And the committee is very clear on returning to price stability and achieve price stability. So these are the main points, and then we can comment on this. What do you think? Well, you've seen the video, you've seen the live with me. What are your thoughts on this?
Yeah, I think the main expectation for the markets was, in general, understand the approach of the Fed, how strong they want to bring down inflation, if they were actually prioritizing the health of the markets, or if they were just prioritizing bringing down inflation, so even causing a recession itself. And we will discuss now the actual approach, which looks like they don't want to cause the recession itself. They just want to bring price stability and rate hike slowly. So the big question was, is it going to be 0.25? Is it going to be 0.5? And I think the 0.25 was already priced in, which is good. And if in the case we saw 0.5, maybe we could have seen more pain on the markets, but this wasn't the case. So we could see even a good bounce in the market, or just keep ranging. So probably not down more.
Yeah, I think this was one of the main points as well during the meeting, right? Most of this is priced in. The current hike is priced in, 0.25 was priced in. So people that don't know, the rate hikes we were expecting were either 0.25 up to 0.5. 0.25 is the lowest range. So pretty good after all, and pretty expected. And then we're going to take a look at the charts in a moment. Should I go through some of the points then? So the first one that I want to touch on was the labor market. So we made a little summary for you guys. So what was said during the meeting just 30 minutes ago was that there is currently 1.7 job openings for every unemployed person. So it's a very, very tight labor market. Companies are having issues hiring, and this is creating a lot of pressure. So the aim of the interest rate restricting the hiking the interest rates is to basically create a much slower demand, and this will give enough time for the supply to recover, and this should eventually bring inflation down, right? So without the price stability, we cannot really have a long period of sustainable employment. So what this means is that we have a strong labor market, but employers are having a lot of challenges hiring new people. And the way to go about this is to slow down the demand to give supply enough time to recover. You got any comments on your side on this?
I think the main point was just saying that the economy is very strong, the labor market is very strong, and the economy would be probably able to get these the consequence of the rate hikes without causing a recession or anything too bad. But a consideration that I will do is like this system is strong and healthy at the moment because it's just coming out these favorable times of monetary expansion, easy credit, and things can turn south very fast. So it's true that the economy is very strong. It would be like all the metrics are good, but then things could go south very fast. So I'm not so sure the Fed will be able to actually do 7 rate hikes in a year. Probably like 4 or 5, and then in case they get to unsustainable level, they just pivot back into monetary expansion they always did.
Yeah, this is one of the points that they kind of said, right? They said these are just planned meetings. There is no schedule on when they're going to happen, how fast they're going to happen, and they don't know it themselves. That's pretty much what I got from what they were saying, right? So it could be 7, it could be in the year, they could be 4 of them right away, and then 3 later on. There is no clear, plan, and definitely not clear pace. Actually, on this, I think one question that was asked during the meeting was that kind of relates to what you were saying. When will inflation come down, and how will you signal that? And I can really answer for everybody listening in, and then we can give some comments. But so the answer was, before the Russian invasion, the Fed was expecting inflation to peak in the end of the first quarter of 2022 and to come down in the second quarter. Now, because of Russian invasion, which caused higher prices of commodities, higher prices of oil in the US, we are seeing an uptick in inflation. So inflation is actually being pushed higher. And plus, we're seeing a lot of stress on the supply chain issues around shipping, for example. So this could push basically forward the relief intended by these hikes. But still, the Fed said that their idea is that we're going to start seeing the results of the hikes by the second half of this year, and they want to bring neutral interest by the end of the year. Now, yeah, I think my take on this was that it is true. The Ukraine war has some effect. At the same time, there was been a couple of conflicting points. One of them was the fact that they were saying, rate hikes take a long time to have an effect on the economy, and that's true. Absolutely, it's not something you see today. And the other one was markets have priced in the rate hike, at least the first one, and that's also true. They priced it in. At the same point, I'm kind of wondering, asking myself, aren't the 2 points conflicting? Of course, we're talking about the markets on one side and the long-term economy, macroeconomy on the other one. So probably they not really that conflicting, but still interesting view. What do you think of that?
Yeah, I think the Fed's prediction, and in general, US prediction on inflation, have not been very accurate for the last 1 year and a half. They were predicting first at maybe at most 4%, and there were no, actually 2.5%, 3%, and then they were saying it was transitory, and then we've seen that for the last 12, it's just been going up and up, and it's not transitory, and it definitely went higher than all the prediction that the people jobs were actually just predict that, and they did got it wrong for like 3 months in a row. And plus, now there's another, let's say, black swan event, which is the Ukraine war. So yeah, inflation is running hot, and it's probably not transitory. It's not going to come down very soon. We see wheat prices going up like 50%, and yeah, we know that Russia and Ukraine are like 1/3 of wheat production exporters in the world, and then like probably 80% of sunflower oil.
Yeah,
so
that was one of the big
inflation is gonna run very high. Like all these type of commodities are gonna increase spending, like cost of production. We see China going in another outbreak, which means like they have zero COVID policy. It's not as bad for the cases of people dying, but they have a zero COVID policy. So there will be another like supply shock from China as well. So yeah, I think for the economy itself, I know it's very strong, but then we have to deal with this crazy inflation, these supply shocks. We won't be transitory. So I don't really see inflation coming down as very fast, probably, hopefully at the end of the year. But then
yeah, I definitely agree. I mean, it's a fun thing I was thinking about the other day, related to this, which is, imagine if you're buying wheat or sunflower oil, for example, right? So the price of some of these goods, just normal goods, kind of double or triple, right? And then on top of that, you're gonna start thinking that the price of oil in the United States more than doubled, and same in Europe, right? So imagine all the trucks and the suppliers that are actually carrying those goods using mainly trucks, and across Europe, I think more than 60% of transport is just petrol-based transport. So imagine you double the price of oil, you double the price of gas, and you double the price of petrol, and on top of that, you also double the price of what you're transporting. It's definitely going to see an increase in price, and it's going to have a strong effect on inflation as well.
One last thing.
Yeah, go ahead.
Like Yeah, my consideration, they were talking about demand being too high for supply, but then the problem they're trying to bring down demand. But the problem we've been having here, the even basic goods, we're having like all the types of supply shocks, supply problems. So like even countries not being able to refurnish the oil, country like even like country in the Middle East that probably have problem with this wheat high prices. So these type of goods are goods that the actual normal person needs to have. So I see more like all this inflation is driven by the supply side. So I understand the Feds are trying to bring down the demand side, but the way the situation is going, recession is definitely on the card.
Yeah, I think on this point, interesting question that got asked during the meeting was about GDPR, so the United States GDPR, right? So what they were saying was we're seeing an increase of GDPR from 2 to 2.8%. So a growth 2 to 2.8. 2% last year was the growth, 2.8% this year, so very small increase year to year. How much of that is due to the policies, right? That was the question. So, and the response was that there was some early assesses of spillovers from Eastern Europe. So basically what they're saying is that, we're already starting to see some of the effects of what we talk about now. And they will basically say that these higher commodities will definitely have an impact on GDPR. It's unlikely to be due to rate hikes, as these have delays, right? And so the rate hikes are probably not going to affect GDPR for GDP for a long time, and even if it was less than last year, even if it was less than expected, it wasn't that far off. It was still a 2.8% increase year to year of GDPR, which is not bad. Last year was 5.8. So interesting question, interesting point on the macroeconomy of the country and how are rate hikes going to affect the country, plus how is the whole Ukraine story going to affect the country.
Yeah. One of the observation I would say is that many have this observation that Feds are actually very late in the cycle at tightening rates. So it's true that the economy is very strong at the moment, but it's actually is slowing down right now. So it would be much better to actually start hiking rate way before. So Fed was still like purchasing bonds and assets on the balance sheet when inflation was like 7%, which is crazy. Anyway, in general, we see now growth slowing down. GDP is not that strong anymore, and Fed still need to hike rates. So that was one of the main observation. The hiking rates probably at the worst time, but they don't really have any other solution. I think the market is doing a lot of work for them. Like already bond yield already very high, because in this type of inflation, like you don't want to hold the bond with negative yielding. So the economy is already doing most of the work. They just need to
Good point.
do.
A point on that, actually, kind of linking to what you just said, was one of the questions was how much inflation has come down as a result of the rate hikes so far, right? So the answer to that was that really rate hikes are delayed, so you're not going to see much of that now. We are seeing a shift in the markets simply because most of this is priced in. But then the answer was the current lowering of inflation so far is mostly coming from not from rate hikes, but rather from the supply chain relief. And they're basically looking for this to come down month by month and reassess the situation over time. One of the things that they are opting for and looking towards is a shift from goods to services. And the last thing they mentioned was that these policies will start to actually bite inflation with a lag. So we're going to see the effect of the policies maybe in 23 and 24. And and they kind of reiterated on the strength of the economy overall.
I think some of the great chart that we looked at in the last live was showing that in general, from the first rate hike, you see a very big correction at the beginning, but then throughout the actually hiking itself, with the usually lasts like a year or two or even more, you can see that the market is actually very wealthy, even increasing. This is actually in a bull market, and you see the actual decline as soon the consequences as soon as the hiking process finishes. And yeah, most of the big recession came as soon as this process finished, and it finishes because the economy just starts going south and Feds have to pivot the other way. So yeah, that's pretty much it. Yeah, I think now the situation is very different. So I don't know. It's always how long can they do it. So I think right now it's not. I won't probably see. I don't think we'll probably see any too much pain in the short term. I mean, probably like we hold time on stocks, so the correction is already happening. They might keep going. But for example, in Bitcoin or other assets, they're already very strong on chain fundamentals that you can see we're really near the bottom. I don't see too much pain. We can go a tiny bit more down, maybe. Yeah, as I was saying, like probably the end of this tightening cycle, we probably finish with like a kind of liquidity crisis, like every asset selling off, lots of pain. When you see that kind of fear, and then yeah, then people panicking, having to sell because everyone wants to sell, whatever, that's the moment that everything is going to pivot. So once you see that happening, that's probably when we actually see the true bottom. But we're very close to it.
Yeah, I think I was going to bring this up as we did last time, and kind of, I think where we are now, we are consolidating, and this consolidation phase that we just seen now, it's basically this anger towards depression phase, and I mean, nobody can really tell where we are. I mean, this is just a cheat sheet, so this is more of an indication, but this is a classic cycle, right, in the market. And we are somewhere down here. We are somewhere down here at this point. This is where you want to be interested in the space. So we're going to take a look at the charts in a moment. Last question that I thought was a couple of last questions worth mentioning. One of them was just a comment. I found kind of very catchy. So it said, last time CPI inflation was this high, 7.9%. The rate hike was 19.72% in 1981. So today's rate hike was 0.25%, right? So I thought that was an interesting, the guy asking the question was kind of biting off at Jay, Pavel, and there was a bit of an interesting question. I don't think he gave a direct response to that, but definitely in the past we've seen much stronger rate hikes than what we're seeing now.
Yeah. I think in general we are seeing it's a very unprecedented time. So like Fed's funds rate at zero, inflation so high, unemployment so low altogether. It's it never happened before. So it's really hard to look back in history and see a very similar example. So that's why there's also so much uncertainty in the market.
Agreed. Should we take a look at the charts, or you want to ask a couple more questions? But I think we probably already discussed every point we want to discuss.
No, don't worry. I think tomorrow we'll probably discuss more macro with the TheAlgoOracle. So if you're interested.
I mean, yeah, guys, if you're following on this now, there is going to be another live tomorrow. You're going to talk about, I guess you're going to talk about some of the more macroeconomic, economic scale, and discuss kind of the economic outlook today. Is that the idea?
Yeah. The idea is talk about the macro outlook in general. So what's happening, more like zoom out and see the economic situation of these last 100 years and what bro has here, like this sovereign debt bubble, and also talk about macro concept like yield curve inversion. What does it mean? And all the things happening in the commodity markets and so on.
Right.
We still need to write the agenda, we'll let you know soon.
Looking
tomorrow.
forward.
Don't forget to follow us on Twitter. We post all our updates, and definitely on YouTube.
All right, cool. Let me pull out some of the charts. Let's start from the big players as usual. Let's go right into. Actually, I think maybe one thing worth looking at now. I mean, the market is closed, so that's everybody knows that. In our case, big difference in between the stock market and the crypto market. But if we look at what's Nasdaq doing, I'm just gonna try to find the Nasdaq chart quickly.
Yeah, today the Nasdaq was pumping. I don't know if you can write it now, but it pumped a lot.
Where do we have that? Oh, there we go. Nasdaq. There it is. All right, cool. Yeah, that's a big spike from usual. I'm sorry for the white chart, guys. Yeah, it's a big 3% up. Yeah, we're gonna take a look at that in a second, but we got a 3% up on Nasdaq. That's a pretty good rebound. And I mean, bottom, how far we got from the local bottom? So yeah, that's a 6% up from local bottom that we've seen. Actually, this is on a 30-minute scale, so I should probably zoom out a little bit more. But yeah, we are about 6% up from a couple of days ago. All right, cool. Let's take a look at the charts, guys. Let's take a look at what's going on in the crypto space. So this is Bitcoin. Let me redo a bit of charting here. I think this is the 1-day chart. So we're kind of still looking at the same story here, right? We're still looking at this big zone here that we just got out of. That was our downtrend channel. We broke that here. And now we're kind of looking at what's going to happen, right? So we touch the upper bound, upper line that is now acting as a support zone, and now we're trading sideways. I know if I go back to the cheat sheet that just showed you a moment ago, right? It kind of looks very much like what happened here, right? You touch that line and then you start trading sideward, and we may very well go back down again. So, we don't have a way to predict things. But we are trading sideways again. So if I had to retrace this line, basically, right now we are effectively in between that line and the dotted line up here, and that's what's going on at the moment. And yeah, I mean, we can take a look at some altcoins, but on the 1 day we've seen a reset of the RSI, so that was a good entry points on the lower point of this line, about $36,000 on. That was a very strong support area that we had.
Do you want to look more at the Bitcoin dominance? Because yesterday we saw holds pumping mostly, while Bitcoin just staying steady. So we saw some strength from all the holds yesterday.
Yeah, I mean, there you go. There you go. Charts never lie. Charts never lie. So this is exactly what we're seeing here, right? So we are seeing Bitcoin dominance being a strong pushback, that really big wick in that daily candle up here. We're seeing money moving from Bitcoin to alts. And effectively what we want to see is we want to break this below this line. We want to go down here. Once we enter that zone, that's our beginning of a shift between BTC and alt, and possibly, alt season in the future. So yeah, we're getting close. We're getting close to that. And the more we consolidate in BTC, that's usually the cycle, right? We consolidate in BTC, we move money to alt, BTC pumps, and then it kind of starts again. Now we kind of have to find a low first in order to go up, but we're seeing a shift here. Right, let's look at the main, I guess, a couple of main altcoins, and let's go to Ethereum, and then any requests that you have, any big names that we want to check out. A couple of trades that we flagged in the last couple of days, guys. So I'm going to show them to you now. So let's start with ETH. So Ethereum, I mean, not much to say here. We are very similar narrative to Bitcoin. Some of the predictions I've seen online from other traders and trading firms was that Ethereum was going to fall down all the way to 1,600. And, that's our strong support. We have a very strong support down here at $1,600. So it's not unrealistic for it to find support here. But at the moment, our support zone is the $2,400. And that's where we bounced off just now. And we are basically doing the same thing that we're doing on Bitcoin. We are basically just moving sideways, and the main resistance is at $3,200. So from here, it's very likely that we will see a lot of ups and downs, and we will have to break that resistance up here in order to move higher. And Ethereum hasn't touched that level in a long time, so I'm expecting to be a quite strong resistance break. Got any comments on this?
Yeah. I was looking at the markets yesterday, and most of the holds were like support, and it was kind of scary because the situation around didn't look too good in general.
Yeah.
So I started looking at all the levels that we could have fallen to, because it could have just end up anyway, like up or down. But then most of the time when you get that type of bearish sentiment, it's actually the time to buy because actually everything bounced today, and you could have like a decent 10 to 20% gain in one day.
All right, that's a good point. Let me see. So I want to see who's the highest gainer. And guys, the green ones are the one that I pulled the trigger on yesterday. Highest gainer. There we go. There you go. Pull the trigger. Top 2. Good one. Sandbox is one of my bags, so I'm good on that one. So let's start with this ones. This is the ones that I opened trades yesterday. We flagged them to you on Twitter. This was our first on entry. We're looking at nearly 2x our target. And that was a sweet spot to enter just yesterday, about 130 on 1 inch. 1 inch is basically just a decentralized exchange where you can swap multiple chains. Coins from
I think the big news is they introduced peer-to-peer swapping. So now you can do instead of actually risking from running from bots and actually paying the fees on Ethereum, peer-to-peer is actually gasless because it matches all the different orders that people are. So if there is like someone that wants to sell and someone that wants for an amount, someone that wants to buy an amount, they don't have to actually go through the protocol itself. They can just exchange without paying any fees. And yeah, that's one of the new big news and big introduction on Incur, all the kind of aggregate DeFi aggregators.
That was a good one. So yeah, guys, just keep an eye on this. We're still in my entry zone. I think if you look at it 4 hours, we are getting overheated as hell. Look at the RSI. This has touched the entry zone, so I'm gonna dollar cost average a bit more. I'm expecting this to fall back down a little bit, probably to this zone, which is where the moving averages are. And then if you just trace a bit of a Fibonacci level, this is probably going to touch the 0.6. There you go. That's pretty much the 0.6 area. So that's where I'm looking to DCI a bit more. So back to 140, 149. That could be another good entry. I go to the next one, Veracity. Really good one here as well. I pulled the trigger on this, although I did put the entry slightly higher here. Maybe my mistake actually on the chart. I think I've been moving this a little bit around, but the entry was supposed to be as soon as we break out of the channel. Now, really good here, really different scenario compared to others. And as you said, we're touching bottom, and if we zoom out, we are touching support, and we haven't been at this level since 11th of August last year. So this is, we were here, we bounced off once, twice, 3 times, and now we're breaking out of this triangle. And, if technical analysis told me anything, when you break out of a descending triangle like this, on the upside, you're going to break with strength. So I wouldn't be surprised, if we see this going up, bouncing on the moving average, and then keep going up from here. And then if you look at what happened in the past, it's exactly what we did, right? 1, 2, and 3. So I wouldn't be surprised if we see that 1, 2, and 3 bounces from there. Yeah, you got any comment on Veracity? Any good news on their side?
Not really. Nothing new on my side. Yeah, I think in general these are all good trades because they're very close to validation point. They're all sitting at support, so you had like many chances to actually buy at a good level with stop loss even just below your 1% if you wanted to. And yeah, in general, yeah, I agree. I'm not the TA believer like you. So I see the general situation, and if Bitcoin goes down and Nasdaq goes down, even if you broke the triangle, it's gonna correct.
Oh yeah,
But then,
of course.
if it doesn't, there's a very big pump. Yeah.
The direction, as we keep saying on Twitter, direction is dictated by Bitcoin. Like direction is Bitcoin. As on main markets, direction is dictated by the global outlook of the markets. But yeah, and the other one I was looking at that I pulled the trigger was the DOT and Super. So DOT, this is also kind of similar to what you said. Interesting to me, DOT is a much longer term trade here. We have basically touched this support zone that we first touched in December 2020, and then we touched in July 21, and we touched again now. We can sweat it a bit longer. So, this is a long-term trade and looking at for DOT to probably span out in at least next 6 months if we start recovering. And, the target here is basically the $50 all-time highs that we've seen before, right? So there's different targets on the way up, but that's it. And the last one that I pulled the trigger on recently was Super. Super, same story here, right? It touched the bottom. We hadn't seen this since July and in September. So that again, January, end of February, and now again. So we're consolidating here, and it's very much just breaking out of this entry zone, and we are so far off from the resistance line. But I thought it was a good moment to start dollar cost averaging, because if we start moving up from here, I doubt we will come back down. If we do come back down, then I can fill in my bags a little bit more. And I mean, I'm definitely not going all in at this point. I'm still very careful, dollar cost averaging, lots of stop losses. But if you look at Super history, they add the odd at crazy price of $4, and which is 60 cents now. And back at Christmas, we're at $2 from here, so 3.5 times. All right, cool. Anything we want to look at before we close? I think. Well, go ahead. Phantom, right? Phantom's been in our chats for the last couple of days. Where is it? Let me
Finally
order.
bounced up. I bought so much at the right time.
So
Very lucky.
Phantom, yeah, I think the 103 entry down here was really good. You can see my comment here. So Phantom broke the major resistance from 140. It has come down to an important support level 115, and this was a couple of days ago. In the next couple of days, we should see the price move back up to retest the 130 zone. That was pretty much spot on. If the market starts becoming more bullish, we should see support resistance flip above the 130. So I'm still waiting for that. We're 121 now. I want this to turn this area into support. I want it to consolidate a bit longer. If this broke the 115 support level, we said it could have fallen down to 0.95 to 1, which is a good entry point. That's exactly what it did, right? It broke below, and then we're back down. We went back down to about $1. Didn't really touch the 0.95 zone, so I'm kind of lying there, but still around that area would have been really, really good entry. And we're doing a mini series on Phantom, guys, so definitely check that one out. I'm going to do another video tomorrow talking about the ecosystem, the main apps. But Phantom, is incredibly good. It's incredibly undervalued if you think about it. The ecosystem, the whole ecosystem is undervalued, in my opinion. And on the long run, I wouldn't be surprised if we 2, 3, 4 years from now we see Phantom easily at $10. Phantom at $10 would just have literally just have the same market cap as AVAX today, and AVAX is in the top 10, and we're in a bearish market. So consider everything. Consider bull market. Consider 3 years from now. I'm not going to be surprised if this is going to be trading at $10.
Yeah, I think this one is a great buying opportunity, especially after all the FUD of Andrew Carnegie leaving. Yeah, if it wasn't for this macro uncertainty, like Phantom was already at 10 right now. Like you can see the activity of the network is way higher. It's like than most of the layer ones, definitely top 10 level. The number of TVL is like the best for layer ones is 0.4, and yes, the total value locked of AVAX. And
see, I actually have that here. I was prepping some of the materials. So yeah, if we look at the market cap, I was saying 6 times the price from here to reach market cap of AVAX in the current market. And then the other thing I was looking at,
another thing, like very, very strong community, very, very strong developers and ecosystem.
Yeah, the ecosystem
Lots
is
of stuff
crazy.
right now. It's like very exciting. Like if you want to get involved in something right now that the hype is that way, Phantom is probably the best place you want to spend your time, especially the upside potential that it has.
There is amazing farming opportunities as well. Like, if you start thinking about accumulating Phantom now, don't keep it in your wallet, don't keep it in Binance. Go and look at some farming opportunities. There's some crazy APYs. We start in a bear market. You do an investment in Phantom. Not only you can make 2x, 3x, 10x on Phantom price, you could easily double your position by simply farming Phantom tokens. So that's something that you definitely should check out. Right, back to the charts. Let's check a couple more. So another one that people have been talking about and going crazy about is Luna, which today is kind of proving my point. It's not moving. Rightfully so. Luna is overheated. Very, very overheated. I put an entry at about $70. I'm not touching Luna before that point. We have been lunatics on the channel for a long time. We're very strong supporters of Luna, but I'm not entering at this point. I'm gonna wait until it lowers.
Yeah, I guess Luna is a perfect example that the time makes if you're very a true believer and understand the potential of something. Most of the time, you just say like, "Why is it not doing anything? Why is it taking so long? It's such a great project." And most of the time, sometimes I sold too soon because I felt like I'm putting my money in the wrong place. I wasn't a true believer in itself. And then I think Luna is actually proving yourself that you should believe more when you see a very good opportunity.
Yeah.
Like I didn't go full in Luna, but I did have lots of Luna myself, but then not enough as I knew I should have.
Yeah,
because I knew it was the best.
That's a common feeling.
We all said this all the time, every day, waking up, but yeah.
So just to share a couple of lines, strong resistance at about $100. That's a psychological resistance level as well. I can see 2 scenarios playing out here just by looking at the chart, and I can even sketch them for you guys. One of them isn't really that clean. So if we go and take the head and shoulders pattern, this is one of them I see play out. So this could easily play out on Luna. It's not clean in the sense that, the neckline doesn't really align, but we could see something like this, right? We could see something going up and down like this, and this is why I have my entry level at that point. And that would be, it kind of matches my entry level, my expectation. The other one that I see happening, it's a possible cap and handle pattern, which is something that goes a bit like this, right? It goes down, and then we have an adjustment period. and then we break out with strength again. Now, of course, this will depend on the direction of the whole market. In that case, I should probably increase my entry maybe at this support zone, which is a 0.5 fib level, and try to get in at that point. But I'm going to reevaluate and do some tweets about it as we get closer to the daily price.
Can you have a look at Astroport? So for who doesn't know Astroport, basically the main DEX MMM on Luna is actually one of the, if you know about Uniswap on Ethereum, you definitely must learn more about Astroport on Luna, which is such like new generation DEX MMA.
We did a video about it as well.
Yeah, I think the idea was actually around 0.6, not even 1 month and a half ago. So thanks. It's actually been pumping a lot. Where do you see a good buy entry? Because I didn't have the chance to.
It is a fairly new coin, so we don't have much history on this. So I would say, it's part of the Luna ecosystem. Luna is the one driving the show here, right? So the same as when we look at major altcoins and we say Bitcoin is going to give us direction, is the same for Phantom. If you're looking at BooSwap or other tokens in the Phantom ecosystem, you look at Phantom for direction. I think this is the same for Luna. So for Astroport, I would look at Luna for direction. And actually, let's see if we can put the charts side by side. I just want to pull them.
Sadly, there's not much data.
Let's see. Let me see if I can pull them.
Actually, started at 0.6 like a month ago, but you can only see half of it.
Yeah, exactly.
I think another one is it just launches Mars protocol, but then you still have to, I don't know, you have to see that the actual protocol is working fine and the adoption is going fine, but then it has all the potential to actually become one of the best lending protocol.
All right, there we go. So Luna and there we go. Let me align this. There you are. So I think, there is definitely, a correlation in between the two. Very strong, in my opinion. You can see it quite clearly. Of course, one of them is, the main coin. But you can see here when we peaked on Luna, we peaked very strongly on Astroport. And then we retraced on Luna, retraced on Astroport. So Astroport is not following Bitcoin exactly as Luna is not following Bitcoin right now, but they are following each other's. Interesting to see whenever Luna moves on the upside, Astroport seems to be moving which much stronger. But of course the market cap is lower, so it's much easier to move the price in such lower market cap. In terms of where I see this going, I think I see a very nice ladder forming here. So if I change a couple of colors so you guys see this a little bit better, we have a bunch of support and resistance zones, and this is one of them, right? So we have this support zone used to be resistance, and we do SR flip, and now I'm seeing sort of the same thing. We should break up and turn the 210 area in support as well. And in terms of RSIs, so if we go back to our one view, not much data that I can really pull from here, to be honest. I would wait for a bit of a reset. Maybe a good entry point for this would be around the support line, the uptrending support line on the uptrend channel. So kind of around this zone. Actually, let me put an entry box in here for you guys, and then we can publish a little bit of tweets around this. But this would be my entry if I had to look at Astroport. I would wait for the possible price to retrace into this box, right? Maybe touch somewhere at this level and then bounce from here. That's what I'm looking at. And I would definitely wait for entry now because of the correlation with Luna and the fact that Luna is incredibly overheated.
Yeah, good.
Cool. I think we've been talking for a while now. So anything else that we should look at? I want to share one thing I want to share with people though, that I'm very keen on. Do not jump into small projects, even if they look really cool. I'm going to show a couple of them. V-Race was an amazing project, right? Everybody loved it. I loved it. We all thought it was really cool. And it is a really cool project, right? NFT-wise, it's a really cool idea. But look at this thing. It's being absolutely destroyed. Like, and it keeps going down. The market cap is just super, super tiny at the moment. And, if you didn't sell at the right time, you go absolutely wrecked here. It's, nearly 1/8 of this original price, and it keeps going down. Another one that people really got on, and I got on myself, was Opulus. So Opulus was music NFTs, and this is just completely destroyed from $7 down to 30 cents. So these are the alts that we are maybe never going to see again.
Yeah, in general, anything below 300 million, even 500 million, the old mentality, it doesn't work. Even if it's a great project, you still have to trade the market yourself, take profit all the time, and then eventually, if this project is strong enough, the moment the bull market starts again, you can see like actually like 10, 20 X's. But then you still need to keep the mentality with these microcaps, just to ride the way up, and yeah, don't get affected to it. Just take profits, because they go down as fast as they go up.
One thing I actually just thought I could cover quickly was a couple of projects that you don't like that I do like, which is for the more risk adverse people, so people that don't want to take too much risk. This was my first analysis. I'm just tracing a couple of new lines here. So Link has always been fairly stable in the market. And it has been pushing really well, but then it's one of the ones that kind of consolidate in the area. We haven't seen crazy price changes. And right now we're touching the super zone at about $14, which is really good. And the next one up is the $20 zone. So you're looking at a good 25%. And the other one, it's Litecoin as well, right? Litecoin here. We can move the support zone down a little bit. It's just kind of an indication, but this is our possible entry zone, possible support area. If this breaks down, then we're looking at $66 for Litecoin, which is half of where we're at now. But when these started pumping in the last couple of bull markets, it went from the current price all the way up to $300, so 3x from here. I think we can cut it here for today. We're gonna do another video guide tomorrow, about Phantom, the Phantom ecosystem, Phantom apps, Phantom farming, everything to do with Phantom. We're gonna cover it tomorrow, and I'm just gonna pull up the Phantom ecosystem again. Lovely to look at here. So don't forget to subscribe, smash the like button, follow us on Twitter and Discord, and yeah, anything you want to add? Maybe our NFTs.
Yeah, definitely. Yeah, we're dropping an NFT very soon. We finalized our smart contract, and yeah, our artists have drove the best feature for our NFTs. So we are actually actively developing our dashboard online. There will be like a trading and with all future options, on-chain analysis, and calendar, all the type of signals that you need to keep track of the market. And yeah, so yeah, we will start as soon as we finish the development. We will actually start doing marketing very actively. So I think if you're looking at this video, you're very early, and this will be a good opportunity to join our Discord and get whitelisted in time before we actually start pushing on socials.
Yeah, just sharing the NFTs on screen. Look freaking amazing. I think the main thing we looked at here was utility, guys. So this is not just cool art, this is utility. If you get one of these, you get access to our services. We're building trading applications, we're building automated trading systems, we're building algorithms, we're building dashboards, we're building automated signals, we're giving you the best alpha we can find, we're sharing calls, we're sharing these videos. We are doing everything with our community, and the more you get involved, the more benefits you have. And this is how we're gonna do it. It's a simple NFT, works as a passport, and it gets you access to the community. All right.
Yeah, I think in general the stretch goal is actually building a DAO, decentralized autonomous organization, and more especially a crypto investing DAO. So around 60% of actually the fund raise will go in a central treasury, and you as an NFT holder, you can actually have voting power to decide how to invest this money. And we will be building around the infrastructure to actually make this collective investment the best as possible. Plus, we have TheAlgoOracle, which is one of the best algorithmic traders ever. So you also have
too much of a compliment, but thank you.
Yeah, I mean, 5 years experience trading algorithmic associate. So come on.
Well, fair enough. All right, cool. Thanks for listening, guys. Thanks for tuning in, and we'll check in with you in the next video. Probably going to be tomorrow, and then we're going to do another live tomorrow. So the TheCoinOracle is going to do another live on macroeconomics tomorrow. I'm going to do a video on Phantom tomorrow. So definitely don't forget to check them out. Subscribe.